Bitcoin has once again failed a breakout of the previous all-time highs, but I'm not panicked at all, and in fact, we were ready for this. Let me explain exactly why. Yesterday's video, little recap for you, in case you missed it for some reason. I was planning to short the next breakout of the all-time highs. And if I just skip ahead a little bit here, you could see that we had orders in the book above the new all-time high. I explained in this video the rationale for taking that in granular detail. Go and check it out if you want to see what that is. But receipts for you, you can see skin in the game, right? We had a sell limit at $126,000 and we had another sell limit at $127,500. Now, those were placed strategically at a breakout of the all-time high. Once again, we thought, or we theorized, that we might see the same pattern as we saw the last time we broke the all-time high, and that was a quick run up, push through the previous all-time high, a pullback from that, not an immediate move up to the moon, up into price discovery, but a break of all-time highs, a little bit of a pullback, and as that pullback happened, we suspected we would start to liquidate some of the very many leveraged long positions in the market, wiping those out and further extending that move to the downside, that pullback. We called the right direction. Okay, the move did happen in the way that we expected. You can see here on the 15-minute chart, we broke the all-time highs, the brand new all-time highs at $125,750, $770, depending on the venue that you're looking at. And we couldn't maintain that breakout. Now, unfortunately for me, the push through the previous all-time high this time was even less so than the last time, and it wasn't enough to hit those sell orders. So we canceled those orders because that wasn't a thesis for evermore, right? That was a thesis based in the moment. It was a high-risk leverage play, and we didn't see the move playing out in exactly the way that we expected. Now, I'm defining exactly the way we expected as price moving up to where we had those limit orders set. Right now, the market has once again, as always, always for right now, okay? Probably not always for the foreseeable future, but right now the market has flipped short, okay? And you can see that because this side of the chart, right? This is the Binance BTC USDT liquidation map on CoinGlass, and you can see that there are clearly much more leverage short positions in the market than there are leverage long positions. That means most of the short-term market participants right now are in short positions. A short position is by definition leveraged, right? That's how it works. Now, if we zoom in a little bit on this, you can see that in the immediate term, right, that is at prices a little bit to the downside of where we are right now and a little bit to the upside of where we are right now, there is more of an imbalance to the long side, okay? That means there are more leverage longs waiting to be wiped out before we kind of get into the meat of this. And if you zoom out, you can see that overall at prices wider from where we are right now, the majority of the market is short. This isn't consistent with the 7-day chart, and that is simply because over the last 7 days, we've seen pretty much one-way price action, i.e. the market is just going up. Just about a week, pretty much, give or take, of up-only days. The other data that we looked at yesterday was the ETF inflows, right? The Bitcoin ETF inflows. And on the last trading day of last week, that is the 3rd of October on Friday, ETFs aren't traded over the weekend. That was nearly $1 billion worth of net inflows. And we can see now the first day of the week, that is Monday, the 6th of October, this week, that net inflows surpassed $1 billion. So this would lead us to believe that the ETFs or the institutional money is accumulating Bitcoin via the ETFs. And that is, of course, the biggest day of net inflows over the last week or so. So presumably from data like this, smart money institutions still getting in. Now that doesn't mean that we have to just keep going up forever. Okay, obviously we've seen this before, right? There's still dumb money in the form of institutional investors piling into ETFs, acting like retail acts, i.e. buying the top. But I would say on balance, price action like this, i.e. not very volatile and kind of just trending, is indicative of the way that institutions like to accumulate Bitcoin. Okay, they don't necessarily like to pile in on massive market orders. They like a bit of up and down so that they can accumulate at more favorable average prices. Of course, what's much better for a big institutional whale is to bully prices down a lot so that they can accumulate at even better prices. And that is more in line of what we saw earlier in September, right? This move down, everyone starts panicking. And that means that the big whales can scoop up at much better prices, basically. In summary, remove those short orders. We did call the move, right? It happened pretty much as we were expecting. You can see it better here on the Coinbase chart. It's a much bigger market than BTCC. This is the venue where I like to trade on futures. But the pattern that we're looking at is this, right? Another gentle break of all-time highs, not super exciting, and then we kind of cool off and come back down like this. And if we look at the liquidations that actually went through, you can see over the last 4 hours, $42 million worth of long positions liquidated, and over the last 12 hours, $90 million worth of long positions liquidated. And the thing to look out for here is that's obviously in massive imbalance with the number of shorts liquidated. So it's happening on both sides. There's leverage on both sides of the market, but basically this is showing you that those leverage longs are losing out massively to the leverage shorts, give or take by a factor of 2. So where does that leave us right now? Well, I'm not looking to get short again, okay? We had that trade idea. The trade idea played out. Unfortunately, we weren't filled on the orders that we had. We just don't have favorable prices to get in on a short position right now. I do think if we look at where the liquidation levels are right now, as I said, if you zoom in on this chart, on the one-day chart on CoinGlass, you can see there's a thicker side of the chart on the long side, right? This means in the immediate sense, there are more leverage longs in the market to the prices immediately to the downside. So I think we could still see some of those long liquidations going through. But if we zoom out, the way that this is looking to go now, much more leverage shorts, okay? And that is the sheep, right? Jumping in on the trend. Oh no, the market's going down, so I'm going to get short. I don't like to trade that way. I like to foresee the move coming and get into the position. Unfortunately, this time we didn't get filled. Sometimes that can be even more disappointing than getting filled and losing a trade, right? Seeing your trade idea play out, but you weren't involved. But very important not to try and play catch up and follow the trade that, this idea made sense up at highs here. It made sense to me to get short up here, but it does not make sense to me to get short right now. The other indicator, if we can call it that, somewhat suspicious of this, but it does seem to play out, is the moon phases. And as you can see here, we have put in a bull moon. I think, honestly, the most likely scenario that I can see for the immediate term is we continue coming down a little bit, right? It makes sense, especially for bigger players in the market, to continue bullying price, right? We might well see some bigger sell orders appearing in the book. Wipe out the remaining long leverage in the market. I think we're going to come down a little bit further than this, but I do think it's likely that we see a continuation of this trend. And the reason I say that is simply because we've seen this play out, right, twice before now, okay? Essentially a fake out of the former all-time high and a beat down again. A fake out of the all-time high and then a beat down again. I think it's likely that this beat down continues a little bit. I can't tell you how much. I really have no idea at this point, but I think it's likely we see a continuation of this move to the downside, potentially some more of these leverage longs that remain in the market, these residual leverage long positions being either forced out of those positions, okay, so they close those longs early. That equates to selling on the market, i.e. dumping supply on the market. Increased supply, steady demand, prices go down. But eventually, as that builds, as panic builds in a down move, right? We were at all-time highs. What's happening? Why aren't we breaking out? I better jump on board and get short with everybody else. Eventually, when prices do come back around again, we're going to start liquidating some of those short positions. And I do still believe that we are in a bull market, okay? I mean, you can see from the institutional money flowing into the ETFs, just by one example, right? You can see long-term correlations with gold prices. I think we are still in a bull market quite clearly, right? We're right up at all-time highs. I don't yet have bids in the market to act upon this, but I am looking for long opportunities, both on short-term leverage trading and potentially for my long-term spot holdings as well, if and only if we see a dramatic move to the downside. So there we have it. I am not currently positioned. I wanted to be positioned. I had orders in the market to get positioned. Unfortunately, they weren't filled. But I do still believe that this move to the downside is going to be extended either a little bit or a lot before we start moving up again. So that's what I'm looking at. That's how I see the market right now. Of course, this is just my opinion, shared with you only for entertainment purposes. This is not financial advice, but thank you so much for watching. Plenty more to come. Catch you in the next one.